before I was Mayfair Gold, I was with Artemis Gold. I joined that company at about a $5 share price, and today it's around a $40 share price. Before I was at Artemis Gold, I was at Silvercrest Metals. When I joined Silvercrest, it was about a $15 million market cap. When I left, it was a $1.5 billion market cap. So I've been part of two multi-billion dollar success stories in the last 10 years. And both of those success stories were based on taking development stage assets and bringing them into production. So I don't know if you guys saw it, but the Fraser Institute just pointed out that Ontario is the best mining jurisdiction in Canada, and it's the second best mining jurisdiction in the world. And we're going to be creating a new Canadian gold producer in Ontario over the next few years. And I'm going to show you how we're going to do it. So I didn't include my forward-looking statements. I'm going to be using forward-looking statements. It's always important to check whenever there's a guy like me up front telling you a bunch of information to make sure that I'm giving you good information. So there's a 4.3 million ounce asset at Fengib. It's got great access, great infrastructure. When I joined the company was focused on building a 25,000 ton per day pre-feasibility study. That's what they were going to put out to the market. But I wanted to do an audit on what the federal permitting process was going to look like if we had to go through that. And what I found, I wasn't too happy with. So it takes you about 7 to 9 years to get fully permitted if you're just starting to go through the environmental assessment process with the federal government. I don't want to be here in 5 years telling you exactly the same thing. We're in permitting. By the way, I need more money to keep the lights on. So what we've done is we've outlined a strategic path to get through the provincial permitting process in Ontario. You have to be very deliberate in order to do that with an open pit. We are developing an open pit project. Usually you need scale in order to get an open pit into production, in order to get the economies of scale. We have a high grade zone that we can focus on. It also allows us to have a much lower capex to get into production. This is the lowest risk way to create a new producer in Canada. I'll get into the access and infrastructure and why this is such a great location. And I want to tell you a little bit about our team. So we're unique in that we're 35% insider owned. We've put $19 million into this company in the last 18 months. I've put $2.2 million into the company in the last 18 months. Half of that position has been built on financings. The other half I've bought on the board. You can look at the SETI filings. I've bought stock in the last month. All the insiders have bought stock in the last month. That's a big difference between us and a lot of other companies out there. We also have a very unique shareholder base. So our largest shareholder is Muddy Waters. Most people know Muddy Waters as a short fund. What most people don't know is that Muddy Waters has made more money by investing in longs than they have on their short strategy. So Muddy Waters is committed to funding us through to production. We got Oaktree into the last financing. It's a $200 billion generalist fund. Most of our investors are generalists because they buy into the business development strategy that we've developed to move Mayfair into production. But why you should believe that we can do this is not because of me. I'm not a technical guy. I'm a finance guy. You should believe me because of Drew Anwell. Drew Anwell is my COO. Drew was previously the CEO of Generation Mining. He's one of the few people that successfully got an EA approved by the federal government in the last 5 years. He is uniquely qualified to help us through this because he knows the permitting environment in Ontario, but he's a serial mine builder. Drew built Detour Lake, the largest open pit gold mine in Canada. And he built it with Pierre Beaudoin. Pierre Beaudoin was my CEO at Silvercrest Metals. Pierre Beaudoin was his CEO at Detour Gold. Pierre Beaudoin has joined us as a strategic advisor. So you need a mine building team. Mine building teams are incredibly rare in the mining space. It's hard to build mines, but if you do it well, you can unlock a lot of value. So this is our location. This is our access, highway access to site within 10 kilometers of a power substation. There's no better setup to actually bring a mine into production. So I've already talked about this, but we could have put out a much larger PFS on a 25,000 ton per day throughput scenario. We'd have about a $4 or $5 billion NPV on that kind of scale project. But we wouldn't be able to get into production for 10 years, right? So look at this PFS that we put out. This is a snapshot in time. It's a permitting document, and it only represents 1 million ounces out of a 4.3 million ounce indicated resource. I'm gonna walk you through these two slides quickly. The point here is there's downside protection. We're focusing on the highest grade part of the deposit. all-in sustaining cash costs are less than $1,200 an ounce for the first 6 years. That first 6 years is what creates the free cash flow that you can use to reinvest in the company. But I'm not a gold bug, but I do believe we're in a generational gold cycle. At $4,500 gold, you're making almost $240 million in free cash flow a year, $1.4 billion that you can reinvest, you can buy back stock, you can pay a dividend, you can grow the company. There's a lot of work that goes into building a mine. This is what I would call the boring aspect that most people don't really get excited about. What I will say is we're going to be at 70% detailed engineering. We're going to finish our front-end engineering design in the next 6 months. And most importantly, and this is the key catalyst for us, we think we're going to get into the 1P process in Ontario. It's one project, one process. It's designed to cut permitting timelines in half. So Craig mentioned that permitting is one of the biggest risks, biggest hurdles to getting assets into production. He's absolutely right, and especially in Canada. So we are going to be in a position where we can have this fully permitted in 2 years and get this into production by 2030. You're not going to find another developer that is just going through the permitting process right now that can get it into production as quickly as we can get the Fengib Gold Project into production. But we need to attract attention while we go through this process. And this is what I'm really excited about. So the northern block that hosts our asset, there's 4.3 million ounces here. The southern block, so the northern block, the assets on the Pipestone Fault, that's an important structure in the Timmins Gold Camp. But the most important structure is the Porcupine-Destor Fault. That's where all the largest assets, all the largest deposits, the biggest mines, they're all hosted within this project, this structure. It has barely been drilled. The previous CEO was focused on drilling kimberlites and looking for microdiamond results. We are not going to be drilling the kimberlites down here. So we're going to do a major drill program focused on the southern block to create some exploration upside as we go through this process of bringing a new asset into production. You can look at Foran Mining and look at the value that's been created for that company. And why do you want to build this? I got into Silvercrest. When I got in there, it was a 15-cent stock. When I left there, it was a $12 stock. When I got into Artemis, it was a $5 stock. Today, it's a $40 stock. The reason why I'm buying stock today is because I think this is a $25 stock in 3 or 4 years. So I'm at my booth. Come and talk to me. I'll tell you about how we're gonna look at this asset long term. This is a great opportunity. It's a unique opportunity. We're going to create one of the next new Canadian gold producers in the next few years. Thank you.